How can we sum up 2018? Pankaj is here to walk us through the details. Pankaj.
Well, thanks for that. If you would talk about one sector that's not done particularly well was the auto pack. Look at Tata Motors, 61% decline. Look at Eicher Motors, mind you, it's a big stock, a 0.25% decline, so about 24% down. Maruti down 22%. Again, it's a big stock. A name like Bajaj Auto is down 16%. TVS Motors is also down about 29%. So definitely it was a year that autos would like to forget. In terms of the start of the year, or when we go back one year across, 2018 began with a very optimistic and a rosy picture as far as Indian auto is concerned. India is expected to be the third largest PV market by 2021. So what went wrong? Cost increased, insurance cost increased, market sell-off dampened the sentiment, insurance cost went up, fuel prices went up, and that essentially created a lot of ups and downs as far as the entire sector is concerned. Metros like Delhi, Mumbai, and some of the other key metros did see flat sales on a year-on-year basis on an expectation of a growth coming in, so that was a disappointment. Hatchback segment with a buzz of launches, micro SUV saw a buzz of launches, but really nothing meaningful in terms of picking up. The liquidity issues facing some of the NBFC names, financing challenges weighed on the CV segment. Now, when we look at the road ahead, or when we look at all the news flow around for 2019, key players like Tata Motors, Maruti, Hyundai, Honda, Ford have all taken price hikes in the month of Jan. So let's see what happens as far as these price hikes are concerned. Will they lead to further demand issues, or will the growth rate continue? Upcoming safety norms will make cars costlier. The estimates are that close to 70,000 rupees or more could be the sort of cost that could increase. New axle norm, tighter financial conditions can weigh on CV cycle in the second half. Growing per capita income, improved sentiments, higher MSP augur quite well as far as two-wheelers for farmer sector is concerned. Trade wars as far as global issues is concerned could impact something like a JLR. So overall, not looking that great going into 2019.
Thanks a lot for that. We'll take that conversation forward with none other than Hormoz. He's editor with Autocar and Giving In Company. He's Mitul Shah, Vice President Research with Reliance Security. Gentlemen, good morning to both of you and thank you for joining us. Hormoz, first, a very happy new year. Thank you for joining us.
Thank you. Happy new year to you too.
So it's turned out to be a okay year for the Indian auto sector. Now, there have been good launches, there have been poor launches. Maruti's maintained market share. That's how traditionally it's been, and others have got weeded out. Tata Motors, they tried their hard with some punch launch and they failed again. So to your mind, how will 2019 be different from 2018?
Well, I think it was said, I think actually, I think it's going to be a really tough year for the industry moving forward because, as was said earlier, you've got these safety norms coming in. So that's really going to weed out a lot of the older cars. And a lot of these cars, were the bread and butter models for some of the companies. So you're going to have the Omni from Maruti going. There's a huge volume on that. They're not going to have another Omni to replace it. They'll have a more expensive car or, let's say, a cheaper version of the Eco to compensate, but they won't compensate completely. Hyundai is going to get rid of the Eon. Tata Motors are going to get rid of a lot of cars as well, but a lot of their older cars actually don't sell in too many volumes. So what you'll see is the Nano, we know, is definitely going to go. The Sumo, Safari as well. They're not going to meet the new norms. So from Tata Motors' point of view, the volume loss with these cars going is not going to be that great. But I think what's going to happen is that cars are going to get much more expensive. So I think that's something which is the industry is going to be grappling with. How much can they pass on to the consumer? We don't know. In this competitive market where discounts are rampant, obviously they can't, so margins are going to be squeezed further. But I think what I see happening is towards the end of the year, this whole, the Supreme Court directive where manufacturers can no longer sell cars of BS4 after April 1, 2020. It was the debate between produce or sell. Now it's sell. So they'll have to clear out all their BS4 stock before April 1, 2020. And I think that's going to lead to some sort of a fire sale at the end of it, because if you don't sell it by then, that car can't be registered and, it's literally scrapped. So I think you might see a huge spurt in volumes, but for the auto manufacturers, that will come at a huge, cost in terms of margin and profits. And then beyond that, cars are going to get much more expensive, especially diesel cars. You're going to see a lot of diesel cars, let's say disappearing, especially in the smaller segments. Now, what does that mean for the consumer? It means that the cost of running is going to go up significantly, because all said and done, diesel is a very economical fuel. both to buy and to run. And if that's going to be replaced by petrol, I think consumers are going to feel the pinch for that as well. So I think overall, we're looking at a difficult time with all these new regulations coming in, and generally, the costs just going up because that's just how it is.
Right. Mithul, what to your mind has really helped or rather held Motown back? Why is it that we are seeing an across-category slowdown in the sales numbers for the past 3 months consistently for CVs, passenger vehicles and two-wheelers? Mithul?
Yeah, if you look at the monthly numbers, it started declining. Hello?
Yeah, go ahead.
Hello? Hello? Yeah, is it clear now?
Yes, Mithul.
Hello? Yeah, if we look at the monthly number of these automobile companies, it started falling from the October onwards. Before that, they were reasonably healthy. So there were a number of factors. Of course, one is the insurance, but apart from that, what we believe that in case of passenger vehicle and two-wheeler, the demand is clearly coming from the rural India. Though urban demand was decent, but it was not in a like double-digit growth. The double-digit growth was attributed to the rural India demand for past few years. But after the monsoon, if we look at the monsoon distribution, though it is only 5% deficit on a pan-India basis, but within this distribution is not even. Few places it witnessed 10 to 20% kind of deficit like Rajasthan, Gujarat, Maharashtra. So if we go by the state-wise analysis, we will see that these states are reporting decline or more or less flat kind of volume, and mainly rural India is not witnessing demand. So that has resulted into primarily decline for the two-wheelers as well as the passenger vehicles. On the CV side also similarly, Excel load norm things started impacting the volumes.
Almost we have seen the hatchback segment that has been quite a buzz with launches. Do you think that there is going to be, some sort of a derailed growth, or we aren't going to see things really pick up? What is the outlook when it comes to hatchbacks?
See, I think the thing about hatchbacks is it's a very, difficult segment to get into. The entry barriers are huge because for one, hatchbacks typically command a much lower price. They're lower down in the hierarchy compared to SUVs, sedans, compact sedans, and then you have hatchbacks. So you can't price them, as high as you'd like to. What that means is you operate with very small margins. You have to have aggressive costs. So you need a lot of localization to be competitive with a hatchback. And that calls for huge investment. Also, the hatchback segment is pretty much locked out by Maruti. So new players are kind of very, they're wary of getting into that space. They don't want to, they think it's too risky. So if you see all the new players, they're all coming in, their first products are SUVs, whether it's Kia, whether it's MG, whether it's Peugeot. Everyone's just looking at the SUV space. So what we see is actually the mid-size SUV segment. That really is the sweet spot. But it's no longer sweet because it's going to become a bitter fight over there. And everyone's entering over there because you've got that balance of volume, price, and you can make a profit there. That's probably the most profitable segment today. So you've even seen Tata Motors coming there, with the Harrier. So everyone's jumping into that space. So it's going to get very competitive, but we can see why they're getting in there because that's the sweet spot. So hatchbacks is very, very difficult to get into in the Indian context because you just can't beat Maruti on pricing over there.
Is there anything, Hormuz, which could have an impact on Maruti's market share? Or you think that the market share is strong enough for next, if not 3 years, at least for next 1 year? Because whatever, reference you've had to hatchback and the fact that there is going to be a fire sale by most of the car companies, Maruti is going to benefit in both.
That's right. I think, obviously, being the market leader, you're the barometer of the health of the industry. So, I think if the industry is impacted, Maruti is the most vulnerable and, has the most to lose. So I think from that standpoint, obviously, it's the overall, the macroeconomic factors, the general headwinds which the industry is facing, which Maruti is facing as well. But I think Maruti is best placed to ride it out because clearly their cost base is far better than anyone else's. I think also they are, not vacating any segment. I mean, for a long time, I thought Maruti would be exiting the small compact diesel segment, which a lot of people are doing. They're not going to be using the Fiat technology. But now they're developing their own engine, and even then, it's something they're just developing and keeping. Despite the fact that they feel there may not be a demand for diesel at all. So that's Maruti for you. They will not leave, they will not vacate any segment like others are doing, because there's this, market share is pretty important for them. So I think Maruti still is definitely the best place. And I think what I see happening is if fuel price keep going up and, the overall cost of motoring goes up, you might see people going towards hatchbacks again, because they fundamentally are the cheapest form of motoring still. And again, that could play to Maruti's strength.
Mithil, do you believe that leadership will remain with Maruti? And I don't mean leadership in the sense of the market share, which I guess they will be able to maintain at 50%. But even the stock price performance, while Motown per se has struggled, even if you look at how much the stock prices have fallen from the 2018 peak to now, Maruti has fallen a lot less than the others. Do you believe that after this 22% decline, Maruti should be bought even today?
Yeah, as you said rightly, that despite the industry situation becoming vulnerable, Maruti still maintained the market share. We believe that Maruti stock performance got impacted purely because of the industry-wide scenario, though as a company, Maruti has maintained the market share. In fact, in few places it has improved also. So if you look at the passenger vehicle as a segment and new launches, so whenever any new successful launches or any right product at right price comes from the either Maruti or Hyundai, it gets massive success as compared to many others, those who are despite having the right product, because of the lack of proper distribution network, after sales service, maintenance cost, all those other parameters which are favoring these two companies. That's why whether it is a Creta of Hyundai or Baleno or Brezza, they get massive success compared to the others. So we similarly expect there would be new products, almost 2 new products they have indicated for the next year, which will again get back them to the right position.
Hormaz, it's life in the fast lane, if you will, when it comes to Bajaj Auto, particularly for two-wheelers. They're looking at some, premium brands and premium launches, whereas for the likes of a Harley Davidson as well, they're looking at perhaps some of the lower category launches. What's the sense that you're getting when it comes to the outlook for the two-wheelers?
Well, I think overall, I think two-wheelers also, especially from the insurance point of view, they were really impacted the most because the insurance was such a huge percentage of the cost which had gone up. So I think even clearly two-wheelers also have their whole issue. But I think what we are seeing is, even the scooter segment, which I think, was a growing segment. What I see going forward, again, if the fuel prices, are pretty high, I think people might even gravitate to motorcycles which are inherently more fuel efficient. They're just that's how it is. So I think fuel prices, fuel economy, running costs is a very sensitive issue with two-wheeler owners, and I think that impact is much more in two-wheeler owners than it's going to be with four-wheeler guys. I think moving forward, yes, as you said, Harley Davidson's going to come down with lower price bikes. Triumph are also planning the same thing, but I don't think the volumes are going to be that big. I think right now, obviously, I think the star is Royal Enfield. Their 650 has, really proved that the company can make a globally competitive product. And I think, that is a real springboard for, let's say, the company, becoming more and more of a volume player going forward, because I think they've got plans to really have a wide range of products, even below the 650 going forward.
Right. Mithil, where to your mind is their value within two-wheelers? Because they as well have struggled along with four-wheelers this entire year gone by. We all know how Eicher's stock price has fallen to a 52-week low. Similar can be said about Hero MotoCorp and Bajaj as well. But would you say that Bajaj is actually best placed within the gamut because they have that currency benefit, considering 30% of their revenue pie is within exports? Or is there any other two-wheeler major that you'd like to bet on?
Yes, certainly within two-wheeler we prefer Bajaj Auto, as you said rightly. But within domestic two-wheeler industry, it has become highly competitive because of the, of course, aggressive pricing by the Bajaj Auto has resulted into the margin pressure for all the players. On other side, insurance cost, higher safety norms, new emission norm coming. So all those costs are increasing for the domestic two-wheeler players, whereas in case of Bajaj Auto, over 50% of the revenue is from the export markets, and again profitability wise we would believe it would be somewhere close to 65-70% profitability caters from the export market. So currency is favoring. On the other side, export volume are growing in a double digit for the company. So despite lower margins witnessed in the domestic market, we believe that export will cushion the overall margins for the company. Compared to the TVS and Hero, we will prefer Bajaj Auto within two-wheeler space.
Gentlemen, it's been an interesting year for autos. I think the slowdown in the two-wheeler sector has surprised everyone. Maruti has done incredibly well in terms of maintaining market share. My friends tell me that it's been a bad year for Audi and BMW, but it's been a good year for Mercedes. So times keep on changing. But thankfully for us, as of now, interest rates unlikely to go higher and diesel prices or fuel prices unlikely to move higher, which obviously will ensure that at least the indirect demand by commuter is going to remain high. So have a great year, Mithul and Hormoz, and certainly hope to see much more of both of you in the year 2019.
Thank you.